if you had $1 billion going up 30% a year, you make $300 million a year doing nothing. Why wouldn't you want to? Like, why wouldn't you want to invest something which makes you 30, 40% a year? Because, I mean, it's money.
MicroStrategy just made a bold move, rebranding as Strategy to sharpen its Bitcoin focus. And they're not slowing down. Strategy snapped up 7,633 BTC at $97,255 per coin, pushing its 2025 yield to 4.1%. Now they hold a staggering 478,740 BTC at an average of $65,000. Michael Saylor breaks down Bitcoin's price drivers: scarcity, corporate and nation-state adoption, and the game-changing Bitcoin ETF. Let's dive into his insights, but first, like, share, and subscribe for more powerful updates. Enjoy the video.
It's the most successful ETF launch in the history of the world. BlackRock's IBIT is the most successful ETF ever. And what's going on is permanent capital is flowing in via the ETFs, and that's the long-term store of value holders that just want to hold the asset as opposed to trade it. It's a very positive dynamic for the space. And the ETFs solve a bunch of problems. They solve the compliance problem. Like in Hong Kong, you can buy the ETF if it's a Hong Kong ETF and the Bitcoin is custodied in a Hong Kong bank, just like, you know, Australia or Brazil would like for the Bitcoin to be in their country. So they solve capital control issues. They solve compliance issues. They solve tax issues. They solve convenience issues. You can pick up the phone, call your broker, and say, buy $1 million of this in 15 seconds, put the phone down, and it's like done, and it's no frills, easy. So they've been helpful. They're part of the ecosystem. You know, and lots of other companies and actors are part of the ecosystem. I mean, the bottom line is everybody's competing for 450 Bitcoin a day. At 90, 95,000 a Bitcoin, you're talking about $40, $45 million a day. When you've got $45 million a day of organic demand, then that's all the natural Bitcoin available for sale. The price has got to go up, right? And so right now, the dynamic, the fundamentals are very positive because all of the slack is taken out of the system. Bitcoin is like this, it's like, you know, 100 people move into a neighborhood and then one rich idiot dude buys the 100th house at twice the price the last person paid for it, and everybody's property value is double. Like, you're hoping for the rich idiot dude to buy the last house, and then it only takes one marginal buyer to lift the property values of the entire network. And I think that's a dynamic that will continue forever. You know, with volatility, it'll go up and down, but generally the dynamic is capital is flowing from everywhere in the world on this network via all these avenues.
Bitcoin's wild volatility is what makes it legendary, unpredictable, thrilling, and full of opportunity. It's a roller coaster ride where fortunes are made and tested. But here's the question: is this chaos a weakness or Bitcoin's greatest strength? Let's hear Michael Saylor's take on Bitcoin's volatility and why it might be the ultimate advantage.
You can't really focus your Bitcoin thesis on its short-term trading dynamic. I think you just have to say, this is Cyber Manhattan. In 300 years, my grandchildren's grandchildren's grandchildren will be insanely rich if I buy it now. And if I don't buy it now, they won't be, right? It's like it's property you want to hold for 100 years. And if you bought a house in Manhattan and you insisted on getting drunk at parties on Saturday night and walking up to everybody and saying, I want you to buy my house for me right now for cash, how much will you pay me? You would sometimes get bids that are less than the price you paid, and it would depress you. You'd probably drink more, right? It's like if you insist upon liquidating all your assets every minute of the day for cash, you're going to find a very volatile bid-ask, and you're going to get depressed. Like, I can't sell it for more than I bought it today, or yesterday a guy offered to buy my apartment for $180,000, and today they only offered $120,000. I'm freaking out. It's like, you're freaking yourself out, right? There is no other real estate asset. When you buy commercial real estate, you don't force someone to give you an all-cash bid every minute of the day and then obsess when the price goes down or goes up. You just say, I'm buying it, in a decade we'll check back again. But the truth of the matter is, you bought the real estate because you intend to rent it or you bought the real estate because in 15 years you'll refinance it. You know, so if you think about New York real estate families and how they think, I bought the most scarce desirable property, I got the best capital, I'm holding it for the long term, I'm never going to sell it, I'm just going to rent it, I'm going to develop it, I'm going to refinance it, I'm going to give it to my grandkids. If you think about Bitcoin like that, then you're good. That constant bid, if you stare at it, you know, with the wrong attitude, it just gives you anxiety and a heart attack, and it'll give you mental health issues. But on the other hand, if you're more mature and you look at it and you say it's jittery, then the right answer is I'm going to sell the volatility, right? I'm going to sell. I want it to be jittery. Like, you want it to be jittery because that gives your options value, your equity value. MicroStrategy stock trades 5 billion in a day. Our stock trades more than Microsoft a lot of the time. Why would our stock trade more than theirs? Because ours is jittery, it's volatile, it's, you know, Bitcoin went from like 98,000 to like 89,000 back to 95,000 like in the 24 hours we're here. It's very jittery, and that means people thought they were long, they were short, they sold it, they panic sold it, they panic bought it back. They've already lived through the equivalent of, you know, 100 quarters of anxiety in just a few days, right? And I'm not selling, right? So the point is, I'm just the beneficiary of what's happening, and I want it to be jittery, but you have to embrace it as the feature as opposed to as the bug. And if you can start to think in Bitcoin and say, it's a feature, it's volatile, and that's what gives me the edge over a person who is less committed, less thoughtful. The person wants it less than you, right? It's like if you live in New York City, you know the value of everything, and occasionally people panic and offer to sell it to you and they mark everything down by 75%. I give you a world. Everything's marked down irrationally by 80%, and it's marked up irrationally by 80%, and you're smart. Do you want to live in that world, or do you want to live in a world where everything is marked perfectly? And the answer is, you want to live in the world where it's all erratic. You get rich that way. In a world where everything is marked perfectly, there's no opportunity for you, right? And so that's the way I see volatility of Bitcoin.
Satoshi, theories on who it is? Creator of Bitcoin, anonymous creator of Bitcoin.
The most important thing to know about Satoshi is Satoshi gave us Bitcoin and conceptualized Bitcoin as a gift to humanity. It was the gift of perfect money. If you define money as long-term store of value capital, it's this gift of perfect money, and they meant for it to be gifted to the world without taking any personal benefit or any beneficial interest in it. And that immaculate conception is one of the most extraordinary developments of the 21st century, for sure, maybe of the last 1,000 years of economics. And it doesn't matter who Satoshi is any more than it matters who Prometheus is. Prometheus gave us fire and separated us from the apes. Satoshi gave us clean money, and now you can build an economic life, and maybe you could achieve economic immortality. And someone probably gave us clean water, and I've read 100,000 pages of history, and I think the story of history is humanity's condition was improved when we got clean water, clean food, clean air, electricity, clean power, when we got petroleum, when we got cars, when we got nuclear energy, when we got antibiotics. If you look at the plight of humanity for thousands of years, people are dying at age 30. There's a 40% infant mortality rate because the food's dirty, the water's dirty, and they've got no hope. And when they were dying of dirty water and dirty food, they didn't know they were dying of dirty water and dirty food. We bled George Washington to death. Every rich person in the Middle Ages died of gout because they drank red wine, because they couldn't drink water because it was contaminated. And so all of these companies If you look at the mortality rate of a corporation is 99%, the average life expectancy of a company is 10 to 15 years. And you can say, well, we'll just take it for granted. Companies should only last 10 years. Just like, 40% of your kids, maybe they should just die before the age of 5 because that's just the way God willed it. Or maybe we should just die at age 31, which is the life expectancy in Elizabethan England. But the point is, they didn't die because they were genetically predisposed to die. They died because they had dirty food, dirty water, dirty energy. They worked themselves to death. And the best thing that ever happened to humanity was the passage of technology. So Satoshi put his finger on one observation. The observation is the money is corrupt and dirty and it's defective. And you want me to show you how it's defective? I tell you the story, 1,000 stories of people being murdered for their money. Every single story of Jews fleeing from authoritarianism. Every story in Germany of the Protestants, the Catholics murdering each other. Everybody that came to America, they came because they're fleeing for property rights. The entire history of the human race is littered with tragedy because people never had proper economic energy. A type 1 diabetic can't store organic energy. They will eat themselves to death. Fat is the way you store organic energy. Somehow, over the course of hundreds of millions of years, mammals figured out how to store organic energy, and they had fat cells. We as humans have not had the ability to store economic energy properly. We tried with gold, it never quite worked. I could give you 100 examples of it not quite working. I can give you 1,000 examples of hyperinflation dating back to 500 BC of money not quite working. For the first time in human history, we have invented a technology that allows a human to tightly bind economic energy to their person, or for a corporation to tightly bind economic energy to the corporation. What it means is you don't have to suffer an early, painful economic death. And you can tell me, oh, that doesn't matter, but I would point to everyone in Africa. I would point to all of the misery in Cuba and North Korea and Venezuela. I would point to the misery in the aftermath of hyperinflationary incidents that took place in Brazil, Argentina, Venezuela, Russia. I could go on forever. There are literally 100,000 pages. Read The Story of Civilization by Will Durant, and you will find 1,000 examples of currency collapse and economic misery. And this person, Satoshi, offered us this gift. The gift is you get to own your own money, and no one can take it away from you. You get to keep it. Right? You get to keep your life force. And what do I think will happen? I think that companies' life expectancy on the Bitcoin standard goes from 10 years to 30 years to 40 years to 100 years. And I think living longer is a good thing. And I think families' life expectancy, is dramatically increased. I could do the simple math for you. The half-life of money in gold is 30 years. Gold debases at 2% a year. 30, 35 years. The half-life of money in Bitcoin is forever. 0% inflation makes your money last forever. So I think that some people will not appreciate it and they won't get it. That's okay. You don't have to buy it. Lots of people won't buy it. By the way, I do think that if you ask how many Americans own it or care, they just tipped the election in favor of Trump. I think they care. I think the crypto lobby is the #1 political force today. So I do think there's a lot of people that do agree with me. They do get it. There are $800 billion to $1 trillion of real money that has been invested in the network. You can trace it if you like. But that doesn't mean it's for everybody. Everyone didn't install electricity in Florida, air conditioning, right? Right, that's new. All sorts of technologies don't get embraced for 30 years, and this won't. But I would say clean money is just as important as antibiotics. It's just as important as fat. It's just as important as clean electricity, right? So that's my answer to you. It's technology. It makes the world a better place, and I think that I think that for 1 billion human beings that are destined to economic misery, for them it's the matter of life or death. You're not one of them, right? We'll stipulate. Lots of Americans aren't one. But drop yourself in Nigeria, where it's illegal to own the dollar, where the naira is going to zero, and then try to give some money to a person you want to help in Nigeria or capitalize a company in Nigeria, and tell me how you're going to do it. Because generally the answer is, well, we just don't. Everybody stays poor, every company fails, and all the economies collapse. And that's the same answer as a type 1 diabetic. We just don't, we just die. And, you know, I think insulin to a type 1 diabetic is Bitcoin to an African.
That's a wrap for today. What do you think about Michael Saylor's insights? Drop your thoughts in the comments. Don't forget to like, share, and subscribe for more powerful crypto updates. Thanks for watching, and I would see you in the next one.